Welcome back to RV News, the trusted channel where we dive deep into the most talked about developments surrounding currency revaluations, global monetary shifts, and the latest updates on the Iraqi Dinar and Vietnamese Dong. If you're someone who's been holding on to your currency bundles, watching and waiting for that long-anticipated breakthrough, then this video is tailor-made for you. Today we explore a fascinating question that has been lighting up forums, investment groups, and YouTube comment sections across the globe. Could a simple $200 investment in Vietnamese Dong actually make you rich? At first glance, it might sound ridiculous. But when you factor in the revaluation speculation and economic forces at play in 2025, the picture becomes far more complex, and possibly far more intriguing. Combine this with the ever-rising chatter around the Iraqi Dinar, and what you have is a scenario that's turning heads and raising eyebrows in the world of global currency investors. So sit tight, because this is going to be a comprehensive exploration you won't want to miss. Let's begin with a reality check. When you exchange $200 into Vietnamese Dong at the current exchange rate of approximately 25,500 VND per USD, you get around 5.1 million Dong. That's a pretty large number in terms of units, but not necessarily in terms of value. In Vietnam, 5 million Dong can cover a few days of modest expenses, or perhaps a nice weekend trip. It certainly won't make you rich in the traditional sense. But that's just today. What if the Dong were to be revalued? What if Vietnam's economy were to hit a boom phase, prompting a shift in the currency's valuation that multiplies its worth tenfold, or even more? This is the core of the dream many investors are holding on to. They believe that one day, the Dong could experience a massive revaluation that would convert their small investment into life-changing wealth. Vietnam has long been considered one of Southeast Asia's most promising emerging markets. With a robust manufacturing sector, strategic trade partnerships, and a youthful, tech-savvy population, the country has demonstrated strong economic fundamentals over the past decade. Foreign direct investment continues to pour in from countries like South Korea, Japan, and the United States, all of which see Vietnam as a lower-cost, high-efficiency alternative to China. In 2025, Vietnam's GDP growth remains above 6%, and the country has made impressive strides in technological development and infrastructure. The Vietnamese government and central bank, the State Bank of Vietnam, SBV, have pursued stable monetary policies, keeping inflation in check and slowly modernizing the financial system. However, despite all this progress, the VND remains one of the weakest traded currencies in the region. Why is that? The reason lies primarily in how Vietnam controls its currency. The SBV maintains a managed float, which means they allow some fluctuation in the value of the Dong, but still intervene in the currency markets to prevent large swings. This keeps the Dong relatively stable, especially against the US dollar. The government's aim is to maintain an export-friendly exchange rate, which means keeping the Dong weak to make Vietnamese goods more attractive to foreign buyers. While this is great for trade, it doesn't help those hoping for a sharp revaluation. The SBV has given no official indication that it intends to drastically revalue the currency. On the contrary, they've emphasized stability and incremental change. For many, this puts a damper on the idea that $200 in Dong could suddenly become $20,000 or more. But speculative hope is hard to extinguish, especially when similar dreams are being sold around the Iraqi Dinar. Speaking of the dinar, the comparison is both compelling and cautionary. The Iraqi Dinar, unlike the Vietnamese Dong, has a far more restricted and politically volatile context. The Central Bank of Iraq, CBI, tightly controls the official exchange rate, which as of 2025 hovers around 1,210 IQD per USD. Despite minor adjustments in recent years, the dinar remains mostly locked in place, and yet thousands of investors across the world, especially in the US, continue to hold dinars in hopes of a massive revaluation. They envision a scenario where the CBI, in coordination with international financial institutions, reintroduces the dinar at a dramatically stronger rate, potentially $1 to 1 IQD or even higher. This is the core of the RV dream, short for revaluation. The idea is that geopolitical improvements, economic stabilization, and increased oil revenues could create the perfect storm for a monetary overhaul that would elevate the dinar's value overnight. But again, we have to ask, what are the facts? Iraq remains politically unstable, grappling with internal divisions, corruption, and a heavily oil-dependent economy. While oil prices have recovered and Iraq has resumed some growth, the structural issues are far from resolved. Moreover, the CBI has not shown any signs that they are planning an imminent revaluation. Experts in global finance and currency regulation routinely warn that such a drastic change would be highly unusual, especially without accompanying policy shifts. Despite these warnings, the revaluation theory persists, fueled by a combination of hope, misinformation, and the viral power of the internet. YouTube videos, blog posts, and newsletters circulate daily with bold claims about pending revaluations, secret memos, and behind-the-scenes agreements allegedly made by global elites. Many of these sources lack credibility, but that doesn't stop them from gaining traction. What ties the Dong and Dinar narratives together is the idea that the global monetary system is secretly being recalibrated behind the scenes, and those who hold on to these undervalued currencies will be the beneficiaries when the dust settles. Proponents of the global currency reset theory believe that a financial renaissance is coming, and the currencies of certain emerging nations will be revalued dramatically. In this worldview, your $200 in VND or IQD isn't just a small investment. It's your golden ticket. But as compelling as these stories might be, they lack verifiable data or support from mainstream economic institutions. Still, one can't deny the sheer staying power of these beliefs and the communities that support them. Let's circle back to the original question. Could $200 in VND make you rich? The short answer is, it's extremely unlikely. For your $5 million Dong to turn into something like $20,000, the Dong would need to revalue from $25,500 per USD to roughly 6.25 per USD, a change that's both economically improbable and counterproductive for Vietnam's trade-based economy. Such a move would hurt exports, discourage foreign investment, and disrupt Vietnam's careful economic balancing act. Not only has the SBV given no indication that such a change is coming, but it would also go against their long-term strategic interests. Similarly, a comparable revaluation of the dinar would upend Iraq's financial system and potentially wreak havoc on its economic relationships, particularly with nations that buy Iraqi oil. That being said, it's not impossible for small incremental gains to occur. If Vietnam continues to grow and eventually moves toward a freer floating exchange rate, it's conceivable that the dong could slowly appreciate over time. The same goes for the dinar if Iraq sees long-term stability and reforms its economic structure. But even in the best-case scenario, we're talking about gains in the 10% to 30% range over several years, not a 10,000% overnight windfall. In that light, your $200 might become $250 or $300 in a few years. Not life-changing, but not bad either. It's also important to consider the opportunity cost. That same $200 could be invested in a diversified stock ETF, a gold-backed crypto asset, or even high-interest savings accounts in some countries. These options may lack the speculative thrill of currency revaluation, but offer more reliable growth and liquidity. The danger of tying up funds in low-liquidity, highly speculative currencies is that you might miss out on real, sustainable opportunities elsewhere. Furthermore, selling dong or dinar at favorable rates is not always easy. Many exchange services charge high fees, and some banks won't deal in exotic currencies at all. This makes cashing out at the right moment extremely difficult. But let's not forget the psychological aspect. For many holders of VND and IQD, it's not just about the money. It's about hope. Hope for a better future. Hope for financial liberation. Hope that their belief in the underdog will finally be validated. This emotional investment runs deep, and it's what keeps people engaged despite repeated delays, false rumors, and setbacks. Communities have formed around this shared hope, and for better or worse, they continue to hold on. Some treat it as a spiritual belief almost, a leap of faith in a world full of uncertainty. And there's something undeniably human about that. In closing, the idea that $200 in Vietnamese dong could make you rich is rooted more in speculative fantasy than economic reality. While it's possible that small gains could materialize over the years, the kind of dramatic revaluation that would turn you into a millionaire is highly improbable given current economic trends and policy positions in both Vietnam and Iraq. Still, For those who can afford to speculate and understand the risks, holding a small amount of dong or dinar might offer a bit of excitement and a slim chance at outsized returns. But don't bet the farm on it. Diversify your portfolio, stay informed, and most importantly, be cautious of anyone who promises guaranteed riches from currency revaluation. If it sounds too good to be true, it probably is. That wraps up our in-depth dive into the dinar and dong buzz in 2025. We hope this episode gave you a clear